A very warm welcome to the GRS Offshore Wind Market Compass, our half-yearly market report, available as movie or printed report in the HANSA Magazin of this month's April. My name is Philipp Schönefeld. Thanks for watching. In general, the charter market for offshore vessels can look back on a fairly sluggish winter 2018-19 with continued historically low rates. Due to the oversupply in almost all segments, offshore ship owners are facing high, growing economic pressures. Consolidation, insolvencies and close downs are clear indicators of the current situation. Nevertheless, slight rate increases can be expected for the remainder of 2019 and 2020 as the oil and gas market continues to recover and the offshore wind market continues to grow globally. Especially offshore renewable hopes are pinned on the Far East offshore wind market with Taiwan and Japan, as well as the US market, which will to a certain extent make use of European tonnage. Let's have a detailed look into the jack-up tonnage segment. Rates remain under pressure would be a good way to describe the situation of jack-up ship owners in 2019. Even if there are signs of growing activity in the Far East, this development will not produce an effect on the currently low daily rates in the North and Baltic Sea. In addition, there are signs of lower activity across Europe in 2019, so that positive impulses are not expected here. While the third generation of installation vessels continues to operate mainly in the installation sector, the use of jack-up vessels for offshore personal accommodation remains the most important area for first and second generation jack-ups and non-self-propelled ones. Our next vessel segments are the crew transfer vessels. Players seem to have learned from the fact that high demand, especially for CTVs with a capacity of 24 pax, could by no means be served in the spot market last summer. As a result, CTVs with a capacity of 24 pax are now virtually unavailable. Large CTVs have been chartered at an early stage and mainly for long-term appointments. Some owners could even achieve day rates of 5,000 euros and more. In short, the very high expected demand for 24 pax CTVs this year will not be satisfied despite some new builds and rebuilds. A similarly good utilization is expected this year for CTVs with a capacity of 12 pax and an overall length of 21 meters and longer. Smaller CTVs will also benefit again from the situation and presumably also earn substantial daily rates in the spot market as of late summer, since large units will no longer be available then. The third vessel segment are the dive support vessels and the general DP2 tonnage. For weather reasons, most installation and maintenance campaigns in the offshore business typically take place over the summer months. It is therefore not surprising that in the past few months we have not recorded fewer deals in the area of DP2 ships compared to last summer. In the long term, we expect a significant improvement in rates for DP2 vessels, since the oil and gas business is slowly picking up again and generating demand for ship tonnage, which was absent in the past few years. In addition to now established markets in the North and Baltic Sea, we expect that Taiwan and the United States will for the first time charter ships for offshore wind power in the coming years. The high level of bidding activity suggests at least that markets for DP2 vessels could open up there. Our next reported vessel segments are the service operation vessel / walk-to-work tonnage. After the 2018-2019 winter season, characterized by a strong supply and correspondingly low daily rates, there are signs of a turnaround in the walk-to-work market for 2019. But looking back, the efforts of many ship owners to keep the vessel utilization high over the winter despite low demand have also significantly depressed the daily rates over the months of October 2018 to March 2019. A contrary trend can however be observed for spring and summer 2019. Rising demand, from the oil and gas segment is bringing 100-meter plus vessels with a high number of bunks, SPS classification, strong offshore cranes, permanently installed gangways back into the focus of the fossil offshore industry. As a result, the daily rates offered from May to September 2019 will presumably be well above the previous year's level. Tonnage of the highest standard, originally ordered for the oil and gas market, will be provided at the price of more than 50,000 euros and chartered in by the so-called oil majors. In conclusion, a clear recovery of rates can be seen, triggered by rising demand in the oil and gas market, as well as a stable demand from the offshore wind sector. This was the GRS Offshore Wind Market Compass Report. In short, we hope you enjoyed it. In case of any charter or purchase or market research inquiry, please simply contact the team of GRS. Bye for now and thanks for listening.